with another video. This one's going to go over a few things. It's going to be risk management, meaning how much you should invest in trading, how much you should invest per trade, how much profit is enough to close a trade, how to recover from drawdown. So we're going to cover a few topics. So let's start off with risk management in general. So let's just say you have $100. Um, you want to risk no more than 1 to 3% per trade, right? That's from Trading in the Zone, I believe, or um, one of these big trading books. I think, yeah, Trading in the Zone, uh, and I believe also Trading for a Living. Um, yes, those books all say don't risk no more than 1 to 3%. So with $100, you should risk $1 to $3. With $1,000, you should risk $10 to $30 per trade, right? Because psychologically, if you have a streak of winners or losers, you should be able to recover if you're not risking too much. If you risk too much, it becomes very hard to recover from losses. So, the first thing, just think about the account balance. In prop firms, your account balance is a lot different. Your drawdown is actually your account balance. So, if you have a 50K account with Apex, you have a $2,500 drawdown, that's your account balance. For Top Step, if you have a 50K account, you have a $2,000 drawdown, but you have a $1,000 daily loss limit. So, technically, you have a $1,000 account, if that makes sense. You do have the buying power of the 50,000, they say, and the same thing with Apex, depending on which challenges you get. You will have the same buying power as what it says, but the drawdown is all you actually have as an account. So the first step is to build up that buffer with prop firms first. With your live account, obviously you can double it and then withdraw, and you can do that repeatedly. That's just up to you if it's something that you would like to do. A lot of people prefer prop firms because the opportunity to invest heavily in your own live account is great. So again, the first thing we're talking about right now is risk management, and how much you should invest per trade. Okay, so per trade, you should be investing 1 to 3%. Now, how much should you be investing per month? So think about your personal income. Right now, if you make about, let's just give or take $4,000, 4,000 times 12, that's about $48,000 a year. Let's round it to $50,000 a year. So if you have no other income coming in, don't expect trading to become like a big income all of a sudden. It does take time. There are some people who can do it quickly, but it's really more of managing your own risk, the time horizon. There's no guarantees you can make anything happen quickly. You have to make sure to take your time. So as far as risk management goes, when we talk about how much we're investing per trade, right? We want to invest about 1 to 3%. Now, if you're making about $4,000 a year, excuse me, a month, $48,000 a year, $50,000 total. You should probably be investing maybe 10 to 15% of your income. So 10% of 4,000 is $400. So about $400 a month should be invested potentially. And that could be split into 4 weeks, so $100 a week. So $100 a week could be a challenge fee, and then the next week or the following week, if you pass, you pay the challenge fee. And that way, you're not over leveraged as far as investments, and you can take your time and grow slowly and not put yourself in a deficit. So the amount you should be investing if you is really about 10 to 15% of whatever your net worth is. Now, once you become a higher level entrepreneur, there's going to be times where you're going to be investing a lot more. But to start, if you're working a stable job, I would say 10 to 15%. And that way you can always get a side job to then fund that. So that's one thing you want to do. Get a side job that can actually allow you to invest as much as you want into trading. The more you can invest, the better. Don't put it all at once, do it over time. Hello. But again, the main thing you want to do is continuously invest. Take your time, be careful, but always be investing and have a budget. So if you're making about $4,000 a month, $400, 10 to 15%. If you want to go a little bit higher, $600 to get the 15%. So that's how much you should be investing based on income per trade, 1 to 3%. With prop firms, it does vary depending on which prop firm you're using, but I do recommend doing about, let's say, if you're doing 1 to 3% of a 50K account, it would be a lot different. So 1% of a 50K account would be $500. I don't recommend risking $500 per trade. What I do recommend is risking about 3 to 5% in the of the drawdown. So if you have $2,500 drawdown, 1% of that is $25. 3% is about $75. 5% is about $125. So risk about $75 to about $125 per trade in the 50K accounts because that's the true drawdown. You want to risk based on the drawdown that you have. So, risk management. So we talked about how much you should risk per trade. We talked about how much you should risk per month. We talked about the percentage. We talked about dollar amounts. Now, if you know how many trades you're gonna be taking per day, you can even split that up further. If you know you're gonna be taking 4 trades a day, right? And you have a daily loss limit, you need to create a daily loss limit for yourself. So maybe you have a daily loss limit of about 400 or $500. So if you know that you're gonna risk $100 a trade, that's about 4 to 5 trades. Now, I recommend limiting yourself to maybe 3 to 4, just because most people do become very unhinged and start to trade very degeneratively after that third trade. Me, myself, I've been through that as well. Sometimes I've recovered all my drawdown after that, but it still is, risky. So just to confirm, there's a lot of ways to do it, but you want to be consistent in your approach. You don't want to be inconsistent with how you approach the markets. The markets are very serious. So a few of the things, let's see. So we talked about the how much to invest per trade, and then how much profit is enough to close out a trade. Now, that's a trick question. Every trade you take is going to be different, and you need to focus on the actual trade, not the profit. Obviously, you want to manage risk, meaning you don't want to risk more than a certain amount. But for profits, we want to use target levels. Now, when you're first starting, you're going to want to be consistent and have small winners. So I recommend having like a 1-to-1 ratio, so that way you can have a lot more winners and you can close more profits. I would say if you're able to get to the point where you can close $250 a day, you're really doing well, and then you can just multiply that across more accounts. The consistent $250 a day can pretty much replace any American's, average job, not a top job. But as soon as you grab two prop firm accounts and you're doing that, you're basically making 6 figures. So if you're able to, be consistent, um, over time, you'll be able to grow the different accounts that you purchase through prop firms or even live accounts. It's all about percentage. So for me, the return on investment for live for paying for props is a lot higher than live accounts, but I will be using a live account once I have certain additional capital. I want to have a huge live account. But just to confirm, it does vary, based on the trade. So like, let's say you have a 50K account and you're trading and you have $2,500 drawdown. For me, I'm targeting about 125 to $250 a day. Now, recently I've been making a lot more than that, sometimes 200 to 600, 700, sometimes, $1,000 a day on certain accounts. But that's because I may have a copy trader. In my face, I typically like to see 100 to 200 and change. And my rule is about 100 and change per trade. So I'm always going for a 1-to-1, and then I'll start adding to my winners. So that's the key to my trading style. Everybody's different, but for profit, you have to get used to at least either adding, letting, like holding winners a little bit longer, but also scaling out. So there's a lot of variables to it. It's not as simple as just set it and forget it. So there's a lot of, people who say just set it and forget it. Maybe that does work for them. For me, I feel like adding to trades helps. I feel like managing the trade helps. Some people overmanage, close out, get back in, close out, get back in. So you have to manage yourself and make a decision whether it's actually worth it. Now, I know I went over a lot of stuff, and the last one is going to be how to recover from drawdown. So, hypothetically, if you ever go into drawdown, let's say you lose a few trades, what you want to do is you want to reduce your risk. You want to reduce your risk in half. And until you recover half of whatever you lost, don't increase your risk. Now, this is something that ICT said. Michael Huddleston, the person who created Inner Circle Concept, smart money trading, you want to focus on reducing your risk. So if you're trading and you're using 2 contracts, you want to go to 1. So what that's going to do is going to allow you to lose less per next losing trade, and then that way your equity curve can be a lot smoother. So the average person, if they keep risking and then they start risking more to recover drawdown, they end up usually losing and creating a deep drawdown or blowing the account. So the key to my success has been reducing risk whenever I'm unsure. Even today, I was a little bit unsure, so I decided to just withdraw all my money and just end it for the week. So I will be back next week. I mean, I did trade a challenge today, but none of my live money. So I will be back next week focused, but you want to always think risk management and the perspective of recovering from drawdown. You need to make sure that you're making a plan. Like, whenever this happens, I'm going to do this, because you don't want to be trading degeneratively to try to recover from a drawdown when all you really need to do is take your time and then manage risk. So make sure you're managing risk consistently and you're not acting out because of whatever occurred. Make sure you're thinking and you're planning and you have goals in mind to actually reach the stars. Don't just, dream. You need to have a plan. So my plan is try to lose less than 300 to 500 a day. That's my goal. I typically don't float that much down, but I have before, and I've floated worse before. So it's like I've been there at the degenerative stage. At this point, as long as even my win ratio, if it's a little bit negative, that's fine. These prop firms allow for a negative win ratio. So my ratio with props is like 1.5 to 1. So My average loser is a little bit bigger than my winner, but I win more than I lose. And then I definitely add to my winner. So that's part of the game. You have to figure out how to kind of game this, not even game the system or the prop firms, but like game your account. Like if as long as your winners add up to more than your losers, you're profitable. If you're profitable, you can take care of your family. If you can take care of your family, what do you care about?